Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host, and I'm glad to have you back. Hey, if you wouldn't mind, if you haven't already done so, is please subscribe to the podcast on whatever your favorite channel is. It's on 30 different channels. You pick the one you like. And while you're out there, please visit globalinvestoragent.com and you can select yourself a real estate agent trained to work with you and I, the investor. They're not typical agents. They know exactly how to identify, analyze, and negotiate on and off market deals, which is really big deal for us investors. And if you are an agent and you want to learn how to make a lot more commissions, because we investors don't just buy and sell one property. We buy and sell multiple properties. And I know because I am an investor and I'm also a broker. So we built an entire team on this called the Global Investor Agent Team. And my suggestion is, as this market continues to evolve, now will be a pretty good time for you real estate agents to click on that Learn More button on the website and set up a conversation and see if this is the kind of thing you should add to your model. So in any case, in the meantime, we've got a great guest today, Jeff Weber. We're going to talk about an alternative investment strategy. And Jeff's really good at what he does. We're just for speaking, great, awesome person, great background. So Jeff, first of all, I just want to say thank you for joining us. So what you bring to the table is definitely unique and very valuable. So thank you for joining us today.
Oh, my pleasure. Thank you for having me.
Yep. Hey, you and I have some similarity in our backgrounds. I don't want to go into a lot of detail on mine because people have already heard of that. But would you mind giving people some of your background? You traveled the world, lived in multiple places,
yes.
And you learned this investing strategy.
I've had an interesting life.
Yep.
After graduating from the University of Nevada, Las Vegas, that was an interesting experience. I got hired by the U.S. Army as an auditor, and I actually invented my way of investing while I was in South Korea, 10 miles south of the DMZ, and I learned the hard way how to do my way of investing because this was BC, as I like to say, or before computers.
Mm-hmm.
Which so I learned how to do my form of investing on 16-column accounting paper that the Army was nice enough to supply to me. So I'm always looking for a way to invest for myself. And I'll give you one quick story of the start of my investing career. When I was 8 years old, I lived in Ramsey, New Jersey, and I loved railroads for whatever reason. Well, we had the classic 4-track railroad running through the center of town, 2 commuter lines on the outside tracks going to and from New York City, and the inner tracks were freight trains. Well, I read everything. My dad would bring the newspaper home every day, and I noticed that Erie-Lackawanna had a stock. I go, wow. And I had about $300 in my savings account from mowing lawns, raking leaves, shoveling snow, all the kid jobs of the day. So I go to my dad and I say, hey, Dad, I'd like to buy 100 shares of Erie-Lackawanna, because back then you had to buy it in round lots. It was hard to buy odd lots. And commissions were high and all that good stuff. So I begged my dad to do that. Well, my dad had totally been burned by the Great Depression, hated the stock market, never invested in it any time in his life, and he said no. Well, I kept trying to nag him to do it. I finally gave up. Well, I woke up Christmas morning that year in 1955 and had the best Christmas I ever had. My dad had bought me a model train set and set it up on the ping pong table in the basement. I was in awe. Well, I enjoyed that. Then when I got to my Christmas stocking, I found somehow, some way, my dad had bought me 5 shares of Erie-Lackawanna stock at 2 5/8 or $2.62 a share. Okay. How he did it, I don't know to this day, unfortunately. Well, long story short, the next summer, the Penn Central Railroad bought the Erie-Lackawanna and redeemed every share of Erie-Lackawanna stock for $16 a share. So I got a check for $80. And I'm thinking to myself, if my dad had listened to me and bought me 100 shares, I'd be getting a check for $1,600, which is all the money in the world in 1955 to an 8-year-old kid. But he did me a big favor because he taught me, that investing was the best possible way to make extra money, and all of us should learn how to invest. So I spent the rest of my life trying to learn the best way to invest, and I finally found it when I stumbled on Robert Lichello's book, which was aptly entitled How to Make $1 Million Automatically. And I looked at it, and he came up with a simple way to invest that's a contrary investing method, which means you're always going to be buying low and selling high. And the secret of AIM is that it removes emotion from investing, which is what kills most people, because most people don't invest logically, they invest emotionally. And I always tell people there are two kinds of investors in the world. There's the Mr. Spock logical investor, and then there's Bones McCoy, the highly emotional investor. And the secret to investing is to be logical. Do you think Warren Buffett gets excited if his stocks go down $5 billion one day? He probably doesn't. He probably yawns, or something like that, because he knows they're going to rebound. I mean, the whole purpose of a stock or any investment is that it's going to fluctuate. It's going to go up and down. The secret to investing is to know what to do when it goes up and down. Now, most people are what I call the herd. They wait for a stock to go up, and then they want to jump on the bandwagon, usually way too late in the process. Me, I take the opposite approach. I'm looking for a stock that is way down in price to start buying, and then wait for it to go back up. Now, what I found with AIM is AIM investing thrives on volatility. Okay. Well, when Lichello invented AIM investing, you didn't have long-term options or leaps to invest in. And so I met many people who said, well, I like AIM investing, but I just don't get enough buys and sells. Well, I discovered leaps, which are about 5 to 6 times as volatile as the stock they represent. And this volatility carries over to the cream of the crop stocks like Apple, Microsoft, Tesla, ones like that, all of which have leaps. There's about 500 stocks that have leaps, and the stocks that have leaps are literally about the best 500 stocks you could ever want to invest in. But the secret is, if you want to make real money, is to invest in the leaps and not the stocks. And, unfortunately, options have gotten a bad rap through the years, and you're never going to find a formal financial advisor who's even going to suggest you buy an option. But they're as safe as the option. And I always tell people, if you like the stock, you should love the leap. And I'll give you a good example why. I had one guy in 2020 who started in like February with $110,000 in Apple. And the way AIM works, you put half of your money into the leap, and you put half your money into cash, so you have money available to buy when it's time to buy. Well, his Apple leaps went from 110,000 to 382,000 6 months later in a bull market. That's pretty amazing. So I've been publishing a newsletter for the last 30 years, and I've got 7 model portfolios in the newsletter. And my favorite is the In the Money portfolio, which in 17 years is up 2,200%. So that portfolio is averaging more than 100% a year over the last 17 years. AIM investing is a long-term investing method. You're investing in leaps that have at least more than a year before they expire, and you never have to worry about AIM leaps expiring, because here's the way I do it with AIM. Right now, I have everybody in January 2025 leaps. So they've got roughly a year and 4 months before they expire. But what I do is I have people roll over the 25 leaps to 26 leaps when the 26 leaps come out, and they come out the middle of September, and I usually wait until October, November timeframe, and I have people roll them over. Now, I'll give you a quick lesson on how AIM works. Let's say you buy 20 contracts at $10, okay? So, which means you're buying $20,000 worth of leaps, or 20 contracts at $1,000 each. You set up a very simple 13-column spreadsheet on a regular letter-sized piece of paper. I'll be glad to send people examples if they would like some. And then you go down to once you make your initial buy, you figure out what is your next buy and sell. And since it's a contrary method, here's what you're going to do. If you bought it originally at $10, you're going to tell at the bottom, how many more contracts would I want to buy if the price went down 25% on the option? So you're going to figure out how many contracts would you buy if the price goes down to $7.50. And it's usually, if you bought 15 contracts to start, which is the recommended minimum, then you would probably be buying 3 or 4 contracts. And then you do the same on the sell side. Since you bought it at $10, I've found from experience, you want to go with a price about 30% higher for your sell. So you're going to figure out how many contracts would you sell at $13. Once you've done that, you place limit buy and sell orders, so you would never miss the order. And the beauty of a limit order is if you put it in at $7.50 and the stock is having a bad day, you might get it at $7.25. You might even get it cheaper. And the same with the sell, you might get it for $13.50 or $14. And that's all you have to do. So then what you need to do is wait. You just check every day and see if you have a buy or sell. And most brokers will send you an alert if you have a buy or sell. And then every time you have a buy or sell, you refigure what the next buy and sell is. And the beauty of it is AIM is giving you not only the price to buy at and sell at, it's telling you how many contracts to buy or sell. It's taken all the work out of it. It's taken all the emotion out of it. And so you just sit back and wait for the price to go up or down and do what you do. Now, being that they're volatile, I've come up with a couple of buy approaches when you're in a bear market. So quickly, I will tell you, okay, I'll go through a quick scenario. You bought your 20 contracts at $10, okay? You get your first buy at $7.50. Spend some of the money, the half of your money that's in cash and on that spreadsheet. You're going to set up your next buy at around $5. Let's say that buy happens, okay? So let's say you've made 2 straight buys you now own 16 or 17 contracts, and then you want to, you're coming up with your third buy. Well, here's where I invoke what I call the bear buy strategy. Since you made your second buy at $5, your third buy is going to be 50% lower and only use 1/3 of your remaining cash. So let's say you went from 10,000 to 6,000 with your first two buys, but you still have $6,000 to buy more leaps with. Okay, so half of $5 is $2.50. 1/3 of $6,000 is $2,000. Well, 2,000 divided by 250 means you're going to buy 8 contracts at $250. Okay, that'd be your next buy. Let's say that buy hits. Okay, well, you still have $4,000 in cash left. You've greatly lowered your break-even point from $10 maybe down to $5 or $6 or lower. I don't know exactly. And now you're going to make another buy. And instead of going bear buy strategy, I'm going to recommend you go super bear buy strategy. What does that mean?
Okay.
Well, half of $2.50 is $1.25. Well, I'm not going to have you buy at $1.25. I'm going to tell you, let's buy at $1. On that. And believe me, quality options can go down like that occasionally before they rebound. So you look at your thing and you say, I have $4,000 left. What's 1/3 of 4,000? Say it's roughly 1,333. I will tell you to buy 13 contracts at $1 or $100 a contract. You still have roughly 2,600 left on your cash. You've gone from owning 20 contracts to owning about 35 or 36 contracts, and you're still in the game because you have a very long time frame before that option will ever expire. So, boom. Now, you don't have to do any messing around when it comes to the sell side. You're strictly going, for the roughly 30% profit every time on your sell. So that is what I call regular aim. Now, I come across many investors who had less money to invest because with regular aim, and I'll give you a good example of that. I had a guy who owned Tesla stock. Well, if you wanted to do regular aim with Tesla with a leap that's at or near the money, it would cost you a minimum of about $175,000 to $200,000. Okay. Well, my friend didn't have that kind of money. So I told him, why don't we do lean aim? I've come up with a new way. And I said, here's the way lean aim works. I said, we're going to buy 1 or 2 contracts at or near the money. So he bought 1 contract at the money on Tesla for $5,000. And then all you do with lean aim, you immediately figure a sell price 25% higher, and you put in a limit sell order at 25% higher. So since he bought his leaps at 5,000, we put in a sell order for 6,500. Within a month, he got that sell. I've got a binder over here. I started that in April with lean aim. I have a binder with about 80 sells for my clients since April. So it is working very well, and it's a great way to use AIM for people who don't have a lot of money. Because I found from experience, the leaps are better with AIM when they're at or near the money. In fact, the very first one I ever had, a guy accidentally bought 1 contract, and I set it up for lean aim. He bought it at $225. We sold it the very next day for $275. leaps move, like I said, if the stock goes up 2%, the leap is likely to go up 10% or more. And I've seen numerous days when leaps, all the leaps in 25 went up at least 10% on a particular stock. So, it's a really great way to invest for long term, and you get the safety of having quality stocks, and an option on a quality stock is every bit as safe as the stock itself. So unless you think Apple is going to go bankrupt, you can not worry about owning Apple leaps, and I've found that over and over, and it works very, very well. I've been helping people do it, like I said, for many, many years, and would love to keep helping people. In fact, I'm even giving a 6-hour in-depth course on my AIM investing ideas in a week and a half. I've already had several people sign up for it.
Okay.
It's going to be, I tell people it's my once in a lifetime opportunity to leave a legacy, because I'm getting too old to keep doing this on a daily basis myself. And I want to leave something to the future generations, so maybe they can learn this way of investing, because it's unlike anything you've ever seen, and it works so well if you take a long-term attitude. I give you another example.
Okay.
I tell people you should give AIM 15 years and see how it's doing for you. And I'm a glutton for punishment. I looked up Crocs shoes stock because I couldn't find the Crocs leaps for 15 years. But Crocs stock moved wildly enough that I thought it would be a good test for AIM for 15 years. All I had time for was to look up the price of the stock arbitrarily once a month at the beginning of the month for 15 years. It's very easy to do that on Yahoo Finance. So I took my spreadsheets, wrote the prices down. Give you an idea, the first year I started with 10,000, 5,000 cash, 5,000 shares of stock when the stock was $13. At the end of the first year, the stock went from $13 to $71. Very good. Well, the second year, the stock went from $71 to $1. Think most people would panic at that point? I think so. But I was just faithfully doing AIM logically, so I kept on trucking. Well, there were 2 periods where you went cash negative about $250,000, and you started with 10,000. So obviously, my investor doing this had deep pockets at the time. Well, long story short, he had 2 periods when you went cash negative about 250,000, but at the end of 15 years, your Crocs stock had grown from 10,000 to 1,750,000, and you had $970,000 in cash in an account that started with 5,000 cash. So I tell people, if you can get away from the, 15 minutes of fame, tragedy, and everything has to go quick, and you can take a longer term view, you will make a fortune with AIM. And I tell people, I said, think about this. I said, do you expect to graduate from college in 2 weeks? I mean, do you expect to get a pension, or God forbid, nobody gives pensions anymore, get a 401k in a month and a half? No, you're going to have to work 35, 40 years to get that 401k, and you're going to have to go to college for at least 6 years. Aren't you willing to spend 5 minutes a day for the rest of your life to make millions investing? Everybody needs a side hustle. And to me, investing is the ultimate side hustle, because you can do it from the beach, you can do it from the resort. You can do it anywhere you have computer access. And, it's very easy to do. And best of all, you're your own boss. You're not working for somebody. I think whenever I think about I'm working, too hard to doing all this, I think to myself, how many people have I prevented from having to be a Walmart greeter at 75, because they didn't plan their life well enough. So
Yep.
My AIM investing method is a great way for people who suddenly wake up and they're 50 years old and said, oh my God, I haven't done anything for retirement. What am I going to do? This is a great way to catch up. And to give you an idea with the lean AIM, if I found on average, lean AIM will produce a 25% profit roughly once a month. Well, I sat down at one point and I said, if I started with $1,000 with lean AIM, where would I be at 10 cells later? And I found 10 cells with a 25% profit would grow your $1,000 to $9,700. And you should be able to make that in about a year from AIM, because, every time, the secret in life is to have compounding working for you, not against you. Why do you think credit card companies compound your interest charges? Because they know it makes them a fortune. So you're paying interest on the interest, which is ridiculous. So get compounding working for you. So, think of it this way. You start with 1,000, you make a sell. Now you're rolling over 1,250. Then you're rolling over about 2,000. Then you're rolling over 3,000. And you never had to put more money in because, you're using past profits to make more future profits. I found this works like a charm, over and over and over. So,
Okay. Yeah. So I'm looking at some of the, looking at your website, jjinvesting.com, and I know there's probably rules about this, but I can't help but notice some of the returns. Like if you go from January, let's see, leaps January 2014 to July 2020, and you look at the portfolio value and the increase, the average is just an amazing result.
We'll be right back with the Massive Passive Cash Flow podcast after I invite you to Monday Night Live. Every Monday night, 7 p.m. Eastern, I teach a class without fail for you on subjects ranging from flipping to buying rentals, managing rentals, wholesaling, commercial, creative purchasing techniques, analyzing properties, identifying properties, hundreds and hundreds and hundreds of subjects. And if you are a licensee, if you have a real estate license, you should definitely tap in because there are a lot of investor agents also in the class. Many of them are on the global investor agent team. So you can learn from them as well as from me how to actually work with investors correctly and profitably. All right, we'll see you Monday night. The link is in the show notes. Go ahead and register. We'll get right to the Massive Passive Cash Flow podcast.
It is. I've been doing it for over 30 years and I'm still amazed,
Yep.
And why, I don't exactly know why, but I mean, I would tell you the reason is because you get the increased volatility. And I always tell people the secret of AIM is buying and selling. I found from experience, the people who have about an equal number of buys and an equal number of sells make more money than people who just get a bunch of sells. You want it to go up and down. And that's the nature of the stock market. So AIM investing is perfectly suited for what the stock market does. And I used to tell people, I'd say, how many people would ride on a roller coaster if it was level, if it didn't go up and down? So, don't panic when the stock market goes down. Like lately, it's been going down. What does that mean? That means, like I tell people, think of this. I said, the stock market is one of the few areas in the economic world right now where you have deflation. which means, well, if I had bought Microsoft, 2 months ago, I would have had to pay $350 a share, say, for the stock. Well, right now I could buy that same share of stock for $300, which means the leaps are also way down on them. And there is is a way, I don't know if you've ever done this, there's a way on Yahoo Finance when you go to the option chain, in the very first column, let's say you want to look at the strike 250 Microsoft for 2025, I don't know, strike 300. In the very first column is a blue letter number combination that looks like a VIN number. I call it the Leaps license plate. If you click on that and scroll up and select 6M, you can see how that leap has done for the last 6 months, the leap itself. And you can move your mouse up and down the peaks and valleys of that chart and see how the pricing of the leap itself has done. And it's amazing when you look at it. You'll see it was $10 3 months ago. Now it's $30 2 months later. And now it's back to $20 a month later. And now it's up to $50 6 months later, type of thing. So it's complete endorsement of AIM investing, because every time I see the valley, I tell investors, you would have a buy here. And when I see the mountain peak, I say you would have had a sell here. You see that? I don't know if you're looking at that, but
I'm looking at, I'm actually back to the charts where you compare if you'd have just bought the stocks in the 10, what you call the Dow Jones dogs, the dogs of the Dow. These are typically, big dividend plays, which I like. I like stocks that pay dividends. But between January 2014 and July 2020, if you'd have bought the top 10, Coca-Cola, Chevron, Dow, Cisco, IBM, Walgreens, ExxonMobil, 3M, Pfizer, Verizon, you'd have made 75%. But if you use leaps, the same time frame, you would have made 594%.
Right.
Exactly. So
you can.
It's about a seven time. You would have your value would have gone up from 60,000 to 416,000.
And see, I have 2 model portfolios in my newsletter that are stocks. I'm proudest of the very first portfolio I ever started was in 1993, which is 30 years ago.
Yep.
That portfolio still has almost all the same stocks it did from 1993, and that is up 1,150% over the 30-year period. And I still remember the very first stock I ever picked for that portfolio was IBM. And why did I pick it? Because I read an article in Barron's when I knew very little about investing in 1993. I hadn't really gotten into AIM by then. And I noticed it said, IBM stock is selling at $40 a share, which is the lowest price for IBM stock in the last 25 years. And I'm thinking to myself, why would anybody in the world want to sell IBM stock when it's at the lowest price in 25 years? Wouldn't they have had to buy it at least 26 years ago to be selling it at a profit? I mean, the only logical thing to do with a stock like IBM that's at a 25-year low is to buy some of it. What the hey? And you look at the model portfolio, the 1,500 I put into IBM in 1993 is worth about 35,000 right now. So, that was the smart move on that. So I tell people, I said, and a good comparison, the reason I included dogs of the Dow stocks in that model portfolio was so I could contrast, here's the profits AIM would make you on dogs of the Dow stocks versus here's the profits AIM would make you on dogs of the Dow leaps. And the stocks in the same 8 or 9 years are up about 102%, not the 540 something percent they're up on the leaps. Now, most people would be very happy to be averaging 10% a year, wouldn't they? Most people don't, I'm thinking. But I tell people, when the risk level is the same with leaps as it is with stocks, why would you want to settle for 102% when you can make 540% with the same investment? Basically, it makes no sense. So many people don't realize the obstacles they have to overcome when they're investing. If you make less than 8% on your investment, I don't care how super safe it is, you're losing money because inflation is greater than 8%. There's no point in doing that. So you need something that's going to pay you, like I'm averaging people 100% a year, so that you can pay the taxes on it. And again, I encourage everybody, because AIM, the only drawback to AIM is it's all short-term profits. So I tell people, do like the smart people do and open up a Roth IRA, get your 7,000-8,000 into the Roth, and then keep compounding your AIM profits in the Roth so they can never be taxed again. I said, I used to figure, I'd say, if you did a Roth for 10 years and put 7,000 every year, you would have put 70,000 into it over 10 years. That 70,000 in 10 years doing AIM would probably grow to at least 400,000 or 500,000. Now you've got 400,000 or 500,000 in that Roth that you can never pay taxes on again. And that's the secret, is to keep your money and not give it to the government.
That's exactly right. I call that, it's like anything, whether it's business, sports, or even military, you have to play offense and you have to play defense. Right. Part of defense in business is managing the expense of tax. It's we're in the United States, it's a privilege to pay tax. We live in the greatest country in the world, but it's your responsibility to manage it. And what I tell people is, you got to think about this, people. Businesses do not pay taxes. You know why? Because all taxes are to a business is another expense. They factored that into their pricing. So your price to buy that car goes up a little bit higher because the car company is paying taxes, quote, to the government, and they're going to charge you for that expense of them paying taxes. So you're really paying them, not Ford, GM, Tesla, whatever, and all of those companies are getting over and over tax breaks. So I think it's only fair that the little guy gets a tax break with his Roth IRA, and he skips taxes on his investments too. Yeah, I agree. Well, Jeff, I tell you what, this has been one of the most enlightening podcasts we've done. It's we've talked about gold and silver and trading and things like that, but it's the first time we've talked about AIM and leaps. And so for people listening, how can they learn more about this? Is there a way to get a hold of you, or how do we do that? Yes, there is. Okay, my website is jjjinvesting.com. And you can, if you email me, I will send you a copy of my free first book that explains AIM totally, and many other free AIM bonuses that you will find amazing, absolutely free. So all you have to do is email me at jeff@jjjinvesting.biz, B-I-Z. So that's Jeff, Jeff, at jjjinvesting.biz, and tell me you'd like the free book. And I'll even send you information about the course I'll be teaching in a week and a half. And you can learn everything you'd ever want to know about AIM. You will learn a great way to invest that will make you millions if you stick with it.
and you will learn a great way to investing that you can learn quickly. I'll give you one quick story. My pride and joy success story was Mark Doherty. He started in January of 2020 with 550,000. Well, we did AIM for the first 6 months. He had never done AIM before. Within 6 months, he completely learned how to do it and said, Jeff, I'll do it myself from July onward. Well, his 550,000 grew from starting in January, grew to 1,750,000 by December for a $1.25 million profit. And he did most of that himself. So AIM is so easy to do that he was able to learn it in 6 months and make that kind of money, and it completely changed his life. Believe me, you make 1,250,000. So while AIM is a long-term investing method, you can make quick profits a lot of the time also. Just like I gave you with that example of my friend Jim, he went from 110,000 to 382,000 on Apple Leaps in 6 months. So the returns are staggering. And again, like I said, options are completely liquid, just like stocks. You can trade them instantly. We're always putting in limit orders, so we never miss a buy or sell. The only requirement is for you to check on your investments on a daily basis for 5 minutes. Isn't that worth making millions from, to spend 5 minutes? I'm not asking you to be a day trader and sit at your computer all day long and have a heart attack like many systems want you to do. I'm teaching you a very easy, time-friendly way of investing. I mean, that portfolio that's up over 2,000%, all I have time for is to check the price arbitrarily once a month. I would say I spend 2 hours once a month, and that portfolio is up 2,100%, or roughly 1 million has grown to 22 million in 17 years. Is that worth a couple hours of your time once a month? You can quit the day job and you'll have a lot more time to yourself. You got to realize the economy is only going to get worse. It's not going to get better. It's mandatory to have a good side hustle these days. You can't count on your job being there tomorrow, let alone 2 years, 5 years, 10 years from now. Maybe AI wants your job. Who knows, Well, you learn AIM investing, nobody can ever fire you. AI will never take your job away, And I'm here to help you learn all the nuances of AIM investing so that you will have a way to invest the rest of your life and have a great legacy to offer your family if you don't have, millions to leave them, You're going to leave them $1 million idea, which to me is even better than giving them the money itself, because they'll probably waste it if you just give them the money. Give them the tools to make the money, and then it's up to them to follow through on it, and they will. So I'm so glad I discovered this method, because I think the only reason we're put on earth is to help other people. And I have found a unique way, I think, to help other people, because what better way is there to help other people than to give them lots of money that they need, because I mean, when I read statistics like 50% of Americans don't have enough, don't have 5,000 in savings, I get scared for the country when I see that. I get scared for those people. What are they going to do? And young people, and even slightly older than young people, realize there's no guarantee Social Security will be there in 20, 30 years, for you. And nobody's giving you a pension anymore. I was lucky. I got hired in 1983 by the U.S. Army, and that was the last year the federal government offered a defined benefit pension plan. And once the government dumped theirs, every company dumped theirs.
I remember that. Yep.
So you got to realize what an economic hellhole you're in. right now, and it's only going to get worse. It's not suddenly going to return to the 1950s where mom can stay home with the kids and dad makes enough money to get you a house, cars, and everything you need. Those days are over. You're on your own, buddy. If you don't do it, nobody will do it for you. So I'm hoping I reach a few people. And again, write me at jeff@jjjinvesting.com, and I'll get you started on your AIM journey, a journey you're going to want to stay with for the rest of your life and pass on to your loved ones, family, and friends.
Yep. And that's actually jeff@jjjinvesting.biz, right?
Yeah, the email is jeff@jjjinvesting.biz, B-I-Z.
Yep.
The website is jjjinvesting.com.
Cool. Well, I just looked at that, and for everybody listening, there's a class coming up August 26th, 27th. But if you, Jeff, do you do that periodically? Do you teach like once a year or once a quarter or something like that? Or
this is the first time I've taught this class in 35 years, and it's probably going to be the last time. We're going to put it online. I'm going to record it and put it online, and we may offer it, for sale in the future. But I'm not going to do it live anymore.
Okay.
So this is a once in a lifetime opportunity to gain my 35 years of AIM knowledge. As far as I know, nobody else in the world is teaching this. And I'll give you an idea of I could be one of the largest 10 LEAP traders in the world with me and my clients. How do I know that? At least 25 to 50 times, I have noticed when I look up a LEAP and I see the trading volume, I was 100% of the trading volume. Mm-hmm. And one day I found it ironical on Apple, one of the biggest stocks in the world. I looked at the money LEAP, I don't know, I think it was the strike, say 200 LEAP, and 150 contracts traded that day. So to get an idea, 150 contracts traded, maybe 50 million shares of stock traded. LEAPs are not heavily traded compared to stocks. Out of that 150, I was responsible for the trading of 130 of those 150.
Amazing. Okay.
I find that staggering, that I'm the Goldman Sachs of LEAPs is the way I look at it.
Yeah. Well, listen, with that, we're going to go ahead and wrap this up, or we went kind of long, but it's such a good podcast. I didn't want to cut it off, but I want to thank you, Jeff, for doing this, spending your valuable time, and for everybody listening. Check it out. Go to jjjinvesting.com and email jeff@jjjinvesting.biz to get the book. I'm going to do it myself, and hopefully we'll see you in class. But for everybody listening,
and I'll just warn people: don't get scared. Yeah. The book is 350 pages, but about 100 pages of that are spreadsheets that I included because I wanted to prove to people everything I said was true. So you could skip a lot of the spreadsheets if you're not a fanatic for spreadsheets, and it's a quick read. It's not that many words, and it's got a lot of good information. I've got a list of good books on investing to read. I've got lots of other good information. So I hope everybody sends for the book. I'm here to help you. I want you to have the life you deserve, and I'm going to do my damnedest to give it to you.
Okay. Well, that sounds awesome. I appreciate it, Jeff. And once again, I thank you for your time and your sharing your experience and your wisdom. This has been a great one. And for everybody listening, again, leave a review on your whatever channel you're listening on. We really appreciate those reviews. And while you're out there leaving the review, check out jjjinvesting.com. And the last thing you'll do before you leave the internet is go to globalinvestoragent.com. And particularly if you're a real estate agent, click on the Learn More button, because I really think you need to make this part of your model, working with investors part of your model going forward. It'll broaden your scope of your business. Definitely will bring in a lot more clients, a lot more money. So we'll see you there. Also, we'll see you on the next Massive Passive Cash Flow podcast. In the meantime, take care of yourselves, and God bless you and your families.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.